We're glad to have you with us this morning, Bob. So adding the word significance, in your view, was just a nail in the coffin?
Well, I guess you could say it was a significant mistake. The Fed, basically, in conducting Operation Twist and in buying these mortgage-backed securities, thought they had to justify those policies by bad-mouthing the economy. They bad-mouthed it so much that a lot of market participants, particularly in the equity markets, who view the Fed as the best economic forecasting unit in the world for the U.S. economy, had to downgrade their assessment of what they should be paying for equities.
But Bob, isn't the economy, I mean, doesn't he have a point? I mean, unemployment has been north of 9%. I mean, there are plenty of pessimistic signs about the U.S. economy. Maybe he's being realistic.
Well, maybe he is, but when you think about it, the unemployment rate has been north of 9% for quite some time. We're looking at data, incoming data, high-frequency data on unemployment claims, chain store sales, rail car loading, steel tonnage, hotel occupancy rates, all of which come out weekly that indicate we are not in a double-dip recession at this point. So I think the Fed overplayed their hand in thinking that they had to be so sour about the economy to justify their policy, when if they wanted to do that policy, they should have simply implemented the policy but not dramatically alter the view of some market participants on where the economy is going.
Robert, it's Michael McKee. Did they not go far enough? We did some calculations looking at the effect of this Operation Twist. If you're trying to finance, for example, a $500,000 mortgage and they lower mortgage rates by 0.2 of a percentage point, it doesn't have a whole lot of effect. It actually saves you about $6 a month on your mortgage. Just too little, too late for the Fed this time?
Well, I disagree with one of the premises, which is that it's only 0.2. You have to remember that some of this Operation Twist was already built into the markets. They had been discussing it for some time and leaking the idea for some time. So I think it's a little bit more than 0.2. However, okay, I hate to be on the one hand and the other hand. However, we have to recognize
if you weren't.
Exactly. We have to recognize that ultimately, I think what they're doing, this Operation Twist and the purchase of mortgage-backed securities, it's basically a shift in earnings power or in cash flow away from the financial sector, because the yield curve is now less steep, toward the household sector. So the impact on the overall economy is actually ambiguous. I don't actually think the economy overall will benefit much from Operation Twist and the purchase of mortgage-related assets.
Bob, we thank you very much for your time, for your thoughts. Bob Stein joining us there. He is senior economist at First Trust Portfolios.